Today it seems like growth and value investors are more divided than ever. With the value investors having MPW and the growth investors having Nvidia, it's definitely been an interesting last couple of months. But I feel overall, under one spectrum, there should at least be some fair comparison here. There is one side to every story. Price is what you pay and value is what you get. So this November, I started a new series and an experiment, which is essentially a paper trading competition. I picked some stocks and the community in my Discord link in description picked some stocks as well that were classified as rather value plays or growth plays. For the growth plays as well, I also tried to pick stocks that historically trade at really high valuations, or what the value investors like to call overvalued. And for the value stocks, I tried to pick companies that the growth investors just call bad companies, value traps, yield traps, whatever you want to call it. So it's $10,000 for 10 different stocks, and I'm just going to let it ride out over a long period of time on the channel. And as long as this channel exists, this series is going to exist. So I figured today I'd provide you guys an update on said portfolio. Before we get into the video, make sure to check out the Dude Dividend Stocks Not Drugs merchandise, the best looking merchandise for any dividend investor. Check that out on the link in the description, and let's get on to the video.
Hello, I like money.
Alright, we'll begin with the current state of the growth portfolio. Once again, I started this channel on the 9th of November, so it's been a good 3 months since then. And 3 months is absolutely nothing, but I think a part of this is to kind of show why you don't want to try to time the market and buy stocks, and not be afraid of buying stocks at all-time highs, because a lot of the companies that I bought here were. So to start off, the current portfolio value is $11,620.71 and a total return of 16.21%. And yes, this does account for reinvested dividends. I'm doing this on dividenddata.com, by the way. Use my affiliate link. I'm not forcing you, but I do get a pretty big portion of that sale. And if you use it, you get access to the channel shareholders channel Discord. It's a real nice treat. Currently, the largest holding in the portfolio by percentage gain is Netflix, stock ticker NFLX. Netflix is constantly nagged for being one of those overvalued companies, but recently they had a really solid quarter and have been doing operations successfully, even cracking down on password sharing. Honestly, Netflix is one of my go-to streaming services personally, and I don't even own the stock, so there's not even bias in there. I think it's a really solid company. Unfortunately, I'm invested in Disney right now for my streaming service play, and I do think that will pay off long term, but right now Netflix is a really quality company. Next, this is literally the definition of having a company with a high PE ratio historically traded that. I actually recently saw a tweet that was from Joseph Carlson, and in 2008 people were calling Costco stock overvalued. Look where it's at now. I just think it's funny. It's one of those stocks that's constantly overvalued, and there's definitely an argument that I think can be made for it, but the growth is absolutely there. I would love to buy a Costco, but it has to be at a fair price. So if Costco goes on like a 2, 3, 4% dip ever, I will definitely be putting my toes into the pond. Costco is currently up 31.55% since the inception of this portfolio, so really awesome to see there from Costco. Next, another company with a really high PE ratio, which is Intuit. Intuit is currently up 26.38%. Next, we have Amazon, stock ticker AMZN. A lot of people have been nagging me of why I'm not buying Amazon in my portfolio. Big reason was the choices that I had with rather Microsoft or Amazon. And at the time, Amazon was not free cash flow positive. Microsoft was free cash flow positive. I was very bullish on Microsoft's gaming segment. AI hadn't even been a thing at that point. And I went with Microsoft, and that's paid out pretty well for me personally so far, but Amazon's such a strong company. And another thing, if I'm going to continue buying all these tech companies, I should just be investing in the QQQ. It makes more sense. Amazon's an absolute behemoth of a company, and currently in the portfolio, it's up 23.7%. Next, we have Waste Management, stock ticker WM, and this is one stock that a lot of you guys were nagging on me for in the comment section when I revealed the portfolio. And I'll say this, I can understand where the perspective's at. There's a very good chance that Waste Management will be removed from this portfolio. Let me know in the comment section what stock you would like to see replace Waste Management. Preferably a really high PE ratio and trading at all-time highs. Next, we have a company in my portfolio that is a core holding in my personal dividend portfolio, and it's of course Visa, stock ticker V. Visa is, in my opinion, a top 3 quality company in the entire world. Very easy business model to understand. They are a payment processing network. They essentially collect tiny fees every time somebody makes a transaction through their system. It's essentially a duopoly with MasterCard as well, and it's an awesome business to own. Currently, Visa in this portfolio is at 14.39%. The last time I personally bought Visa was at $270, and in my opinion, if Visa continues growing their earnings, right now in the long term could be a solid time to be adding, even at these all-time high prices. That's another part of this portfolio, is to show in like a very long-term time horizon. Will it really matter if you buy these stocks at, crazy valuations or at all-time highs, or will it actually make an impact? That's kind of the part of the experiment as well. Next, we have Microsoft, which in my opinion is the highest quality company in the entire world, which is up 12.24%. Obviously, timing does matter with Microsoft here. They've had a crazy AI run, but still seeing some solid gains there. Next, we have S&P Global, stock ticker SBGI, which is such an essential business to really how society and other businesses operate. Recently, S&P Global announced they'd be acquiring another data company, only widening their moat in my opinion. S&P Global has been on a rampant run of buying up these data companies and really widening their moat over the last 3 years. A lot of other financial companies as well had lower dividend hikes. S&P Global, though, over the last 2 years has been making a lot of acquisitions and really investing back into businesses and making acquisition. So I think that's mainly a reason in the short term why you could see some slower dividend growth from S&P Global, but over the long term, I believe this has every characteristic to be a double compounder with cheese. Next, we have Apple, and Apple's another tech company. You can see a repeating theme here. Apple's actually one of the only two losers in the portfolio, currently down 6.06% and 3% today, so obviously that's nothing wild whatsoever. Me personally with Apple, I've actually been buying a little bit recently, and if it continues falling, I absolutely will add more. I recently made a video on Apple basically explaining why I think it could potentially be at fair value long term, and they're also reallocating some money towards AI. So there is a chance that long term, Apple could be the next big AI company, who knows. But overall, Apple's ecosystem, their brand, management and pricing power and profitability, and historic share buybacks are some of the key reasons that I love Apple so much long term as a company. And lastly, we have Nike, stock ticker NKE, which is down 6.19%. Nike's another company with really quality growth, and it's actually overlooked by a lot of people as well. Very high valuation, and that's one of the things that a lot of people don't love about the company. So Nike's in here as well. Overall, the growth portfolio is going very solid. I still think that we got very lucky when I bought all these stocks right before the crazy bull run that we've had as of late. And to do the reveal, the growth portfolio wins. Currently, the value portfolio still had really solid gains, sitting at a total return of 14.03%. And honestly, some of these stocks are down a bit today, including Target and Altria, but still the value portfolio is performing very well in my opinion. We picked some solid stocks on here. To start off, the strongest gainer is Discover Financial Services, which actually Capital announced that they would be acquiring them. They're up 43.78%. Discover has very strong financials, and it appears to be undervalued relative to that. I regret not taking a second look at that, but congratulations to all Discover shareholders. But thankfully, of course, Target in here is the second largest gainer, sitting at 39.2%. In my personal portfolio, I am in the green with Target again. Nice to see. Next, we have Disney, another company that's had a big turnaround as of recently. Really, still a lot of question marks, I think, around Disney, but obviously a really strong start to the year for them. For Disney, 2024 is an absolutely giant year, and it's amazing to see that they started off strong with a 50% dividend hike and strong free cash flow. Next, we have Intel, and Intel is up 17.37%. Intel overall, another turnaround play. A lot of these companies as well are turnaround plays. I still personally don't love Intel due to its high capital intensive business. I just personally think that there are better options out there for me personally, but obviously there was a huge value trade-off with those risks associated with Intel. Next, we have PayPal, which is another popular holding. Very interesting company, PayPal, and that's currently up 9.51%. Next, we have VICI Properties, which sits at 4.5% in gains. Realty, not Reality Income, sitting at 4.10%. I did Realty Income and VICI simply because of the interest rates and the fact that all REITs are really undervalued a few months ago and still arguably are. Overall, I got in at a decent price, and I'm happy to be paid to wait. I will say this with Realty Income, though. In a lower interest rate environment, I think I will potentially sell out of this one or when they eventually recover. But for me, it's still a long-term holding. If it goes back into the 40s, I will be buying more. Speaking of a company that is going below the 40s now, it's Altria, stock ticker MO. Altria is down 1.43% in the portfolio. Recently, they announced they'd be buying back a whole lot of shares, and I'm very close to buying some more Altria in my portfolio right now. Below $40, I think it's a really solid deal. I'm still holding this one to a lower allocation in the portfolio for my portfolio personally. Altria is definitely a bit of an outlier in my portfolio, but the cash flows are there, and I think it's undervalued relative to those. Next, we have 3M, and 3M is another turnaround play. I own a decent amount of 3M in my portfolio, and I am looking to sell out at some point. It's a bit unfortunate. I'm down a lot on my 3M position, and I might just have to bite the bullet at some point. And lastly, one of the companies that I actually think are the stronger ones in here and most undervalued, which is Hershey. stock ticker HSY, which is down 3.91% in the portfolio. Hershey is a very strong brand, but overall cocoa prices are impacting their business right now. It'll be interesting to see how that affects them in the medium to long term. But overall, I think this is a really solid quote-unquote value portfolio. I think it's still really high-quality companies in here. There's definitely a lot more risk involved with this portfolio than the growth in my opinion, but there's obviously a huge trade-off with value. Alright, so that's your update, you guys. Currently, the growth portfolio is outperforming by 2%, but once again, this fluctuates. I'm going to look to provide an update to this series every 2 to 3 months, so make sure to subscribe and turn on post notifications to stay tuned for that. Thank you guys for watching, and do dividend stocks, not drugs. Have a good one.